So I've been fortunate to work with, entrepreneurs, business owners, people across the country, all 50 states, events from coast to coast, from Miami to LA. And there is this confusion about a hard inquiry and a soft inquiry and how you know which is which. And are people telling you the truth? And is it really hard? Is it really soft? Today we're going to unpack this once and for all. If you're getting value out of this, you should give it a thumbs up and share it and subscribe, because then it helps us make more. It knows that, lets us know, hey, this is a valuable video. So bottom line is, are you screwed by credit inquiries? Well, they make up 10% of your credit profile and 10% of your credit score. And so it's a 10% impact. It certainly has an effect on unsecured funding like credit cards and unsecured loans, but it's not going to have much of an impact getting a secured car loan or a mortgage. There's just different underwriting guidelines with that. So that's where we're at with credit inquiries. But there's this big disinformation campaign out there about hard and soft inquiries. And it's interestingly enough, oftentimes you go and you apply for a mortgage, and I don't know why these guys lie, because I know they're licensed and they're supposed to be really smart and on top of things, but they'll often tell me, oh yeah, this is a soft inquiry, and it's not. And not only is it a hard inquiry just to get pre-qualified for a mortgage often, but it's a tri-merge, meaning Experian, Equifax, and TransUnion are going to ding all of the three credit bureaus at once in a tri-merge mortgage credit pull, and it is hard, and there's a negative impact to your credit. So that's a hard inquiry. And so there is a way, and this is what I was alluding to earlier, to know whether it's actually hard or soft. The big key is in the form that you fill out. If someone is asking for your social security number, then 9 times out of 10, that will be a hard credit inquiry, have that negative impact, show up. The funny thing is, every single month there are probably dozens of soft credit inquiries taking place on your credit, and you don't even know about it. And what those are generally is those are going to be your mortgage company, your banking account, your lender, could be any credit card companies. And what they're, especially those that have a line of credit or a credit card revolving account with you, they want to see that you're not getting into trouble. And so they'll do a soft credit check oftentimes each month just to see that you're making your payments on time. And if you start defaulting, falling behind, they'll start cutting credit limits and even close your account. And so the real difference that you're going to find out, again, whether it's hard or soft, if it's hard, you're going to put your social security number down in the application form. If it's soft, generally all you need is your address, name, and your date of birth. But there's no reason to to be ruled by the archaic old school way of doing things that brick and mortar banks still do, and take a hard credit hit when you can get a soft credit check at a company like ours or others out there, just to find out what your options are with no impact, to your credit profile and your credit score. And so at the end of the day, that's the key. You should be getting soft credit checks, and you'll know 9 times out of 10, they're not going to ask for your social. Now, there are some occasions at times where your credit might not be found by Experian or the credit bureau who is issuing the soft credit check report. And so that company might have to contact you and actually get your social. That's a rare instance. So when does it become a hard credit pull? When you actually accept the loan, or even with some credit card companies, you can get a pre-approval, a soft credit check, and it's not hard until you accept the credit card or accept the loan. And so that's the smart way to do it. Do the soft check, and then sometimes you need to do a few things to become fundable, and you take those steps before you go down the road of taking the hard credit inquiry to make sure that inquiry is not going to be in vain. There's nothing worse than taking a credit inquiry and still getting declined because you didn't, put yourself in a fundable position first. So that, my friends, is the difference. Hard and soft credit inquiries, obviously you want to do soft, but when you actually accept funding 9 times out of 10, there will be an eventual hard credit inquiry to actually accept a loan, line of credit, credit card, etc., etc. So if you want to help other friends and family, share this video with them so that they finally know the difference between a hard and a soft credit check.